Bitcoin and the S&P 500 are starting the week off with a little volatility. Here's what's happening. The dollar is surging. Since September, the US dollar index, DXY, which tracks the dollar's value against 6 major currencies, has climbed from 100 to 110, just shy of its 2022 peak of 113. On top of this, the US 10-year yield has continued climbing toward 5%. This matters because markets rallied after 2022 on the belief that both the dollar and bond yields had peaked. The assumption is now in doubt. Here's the problem. Global bond yields are rising even though the Federal Reserve has started cutting rates. Normally, long-term yields are expected to fall when the Fed eases. Long-term yields reflect the market's expectations for short-term interest rates over the coming years. But instead, long-term rates are rising, meaning people are selling long-term bonds and the price of these bonds is falling. Why? One reason could be that investors are losing faith in U.S. bonds due to extreme fiscal deficits and a debt-to-GDP ratio of 125%. This creates a dangerous cycle. Higher bond yields make debt more expensive, but a stronger dollar makes it even harder for foreign borrowers to pay back dollar-denominated debt. To cover these costs, they're forced to sell liquid assets, stocks, bonds, Bitcoin, gold, anything that they can convert to dollars. That's why a rising dollar and higher yields tend to push other asset prices down. The stronger the dollar gets, the more selling pressure builds. So how does this end? If nothing changes, the feedback loop of dollar up, yields up, assets down could spiral out of control. Rising yields would destroy bond portfolios, destabilizing the banking system, which depends on bonds as collateral. It could bring the whole system down, but history suggests that this won't be allowed to happen. Central banks can intervene by buying bonds to lower yields, effectively printing money. This leads to one of two outcomes. One, either the system collapses, or two, currencies are devalued to keep things going. In either case, the winners historically have been hard assets like Bitcoin and gold, assets without counterparty risk. The market is already signaling this too. The last time the dollar was this strong, Bitcoin was under $20,000. Today, Bitcoin is above $90,000. The takeaway? Hold the only asset without counterparty risk and without dilution risk. Stay solvent and expect volatility to continue. We've seen similar moments before, and the result has always eventually been more liquidity. This time probably won't be different. Thanks for watching, and see you next time.